I did forget to post this in the community post, but Realty Income did raise its dividend by almost 4%. Realty Income declared about almost 25 cents, so it's almost a 4.2% increase from the prior of 23 cents that they were paying, so that's pretty cool. One thing I noticed is that the ex-dividend date for some reason is incorrect, so ignore that part, but we did get a raise from Realty Income, so congrats to all the Realty Income shareholders. What's up everybody, this is Investing Sensei here to bring you episode 110 of the portfolio update. So you guys already know it's Sunday, so we are here. We are going to see how much we grew that dividend snowball. You guys already know every single Sunday we come back and see this projection continue to grow and grow. We are trying to hit this to $3,000 before the end of the year. I think we are on track. We got to go about maybe $43 or $42 or so more to go. We will hit our huge milestone for the year, and then 2022 we'll have another milestone we will try to achieve. Remember that we are trying to build this portfolio to generate this passive income that continues to grow and grow, because eventually we are going to use this money to live off of. And we actually do have actually, real quick, just to show you, you already know that this is continuing to grow and grow every single quarter as well. You guys already see every single week as well if you guys have been following the channel for a while now. But I do have quite a few things that I do want to cover in this portfolio update, guys. The first one is I'm going to show you guys all the trades that I did this week, and we are going to also look a little bit into the O&L stock, so I'll tell you a little bit about that as well. I'm going to show you guys the ultimate cheat code for qualified dividends. I'm going to show you guys how you could basically live off of dividends without having to pay any taxes. So we will go into that. And then the last thing here that I will be covering, guys, is going to, actually getting our current positions we did this week and seeing how much we grew this projection, because we're going to see how long it takes us to get to 3K. So I'm pretty excited. I think maybe hopefully next week or the following week we should get very close to 3K. So I'm definitely excited to see how long that takes us. But the other thing is that, we didn't do absolutely nothing and the portfolio already hit a new all-time high. It is actually at $210,173.79. This is one of the best portfolios I have so far. It's super passive. It's just an autopilot growing and growing. If we look at the value over time, over the whole time of investment, you just see this thing trending, going upwards. You'll see this little bump here was the 2020 market crash that we did have. We had like invested about maybe 88,000 or so, almost 90,000. It crashed all the way to like 69,000. I believe at one point it got to like 66 or so. But we just continued investing, added more money when we saw the portfolio red, and this has been paying off very, very well. You'll see the trend going upwards as well. If we look at the 1 quarter, you'll see around August we hit about a 193, and then we just kept going downwards because of September typically is one of the worst months for the stocks, I guess S&P 500. But after we hit October, the portfolio just continued to move upwards, guys, and then now we are at all-time highs, $210,000, guys. It'll be very exciting because our new milestone is to try to get to 250,000, because that would be $250,000. Remember that our long-term goal is to try to get this portfolio eventually to $1 million. I want to get this to a 7-figure portfolio. We will see how long that takes, but it definitely is exciting coming back every single week, showing you guys how my progress is. And M1, it makes it very passive because I put the trades in. Like, let's say I had $100 to invest tomorrow on Monday morning, I just go ahead and put the trade in today. So like, let's say for example, I have always been buying Lockheed Martin, but let's say I had $100, I go ahead, click buy. It takes a little bit for some reason, but you just click 100, and then if you had the money, it just puts the trade in there for you. It's almost like in the queue. Then you can see it right here in the upcoming trades, what's going to be traded. and then I just go on to work. I don't have to worry about trying to get the best price. Obviously that is a downside, but it's got its pros and cons. So that is one of the things with M1, because you only get like one trading window. So to me, for this portfolio, it definitely fits the actual I guess M1, so fits perfectly. But yeah, let me show you guys over here real quick. So I'm gonna show you guys the activities. So I'm gonna show you guys the 15th was the first week, or I guess where it started, and you'll see on the 15th, guys, we actually got the 6 shares of this is going to be O&L, but it doesn't show the name, so I'll show you that in a little bit. But on the 15th, guys, we got AVI dividend of $41.90. How awesome is that, guys? As well, on the 15th, we also got $6.63, and then relative income $14.35. That was passive, guys. This week I had to do absolutely nothing for this. Eventually I want to get to the point where these type of companies are pouring in a couple $100, and we're just living off of these, so it'll be pretty cool, which I'm going to show you guys the cheat code for that, for paying basically no taxes. But anyways, on the 15th, I went ahead and bought $8.23. I did one buy. This was actually a dividend reinvestment from Costco of $8.23. And then on the 16th, we did 3 buys, which was reinvesting those dividends. And we basically did the drip of relative income, Procter & Gamble, and AbbVie, guys. So we bought more shares, and then the following quarter we should get even more dividends. So imagine getting more equity in these companies, and we don't have to worry about what the stock is doing. If it's up, down, green, red, we don't care. We just reinvesting, getting more shares, and getting more and more, because that's going to grow that snowball. But on the 18th, you can ignore this $1,200. This is from M1 Borrow, but the $180 was actually going into the portfolio, and we reinvested those. We did 5 buys. So I bought $20 of AbbVie, Procter & Gamble, 20 of Caterpillar, and 20 of relative income. So the reason for those $20 is because every time a company pays me out a dividend, I have a goal of forcing myself to add more money towards the company that just paid me out a dividend. So in my case, I will go ahead and contribute an additional $20 for every time a company pays me out a dividend. It's just an aggressive way for me to make more, I guess invest more, and grow that passive income much faster. If you wanted to try it, you could do it for $1, $5, $10, whatever you could. You could even do $100. But my goal right now is $20 every time a company pays me out. And then we deposited the $100 for our dollar cost average every single week, and we bought some more Lockheed Martin, guys. We're gonna continue buying Lockheed Martin until until it stays in these prices and it starts recovering. So the next thing here, guys, is the referral bonus. Somebody was super awesome. They used my referral link. They signed up. I believe all you have to do is deposit $100 into the account, and you get $50. I will get $50. So that is a 50% return on your money right away. But yeah, if you are interested, M1 is running this promotion. They were running about $30 if you signed up. They're doing the $50 now. So take advantage of that if you have been considering M1. It's super awesome platform. I like it. Obviously, you don't have to use my referral link, but if you do, I will be very grateful. Check out the video description. I have that. And thanks so much again for whoever signed up with my referral link. I appreciate it a lot. You will allow me to buy some more Lockheed Martin with these $50. But on the 19th, we got a dividend of Caterpillar of $5.82. So that was pretty awesome, guys. Let's go ahead and find out how much we made for this week in completely passive income. So I have this green button. This is a script that I wrote. It's completely available for free. Check it out. I have a tutorial for it, so it's completely free. But all it does is adds up all the dividends in this I guess table, and it shows this to us in a summary. So click calculate dividends, and we made a total of $68.70 this week in passive income, guys. We had to do absolutely nothing, and so we will see that snowball continue to grow and grow. Remember, we are working on 2021 Q4, and we still have 2 more months. Well, I guess, yeah, 2 more months to finish this out. We'll definitely surpass the $700 mark, and we'll see this snowball grow much larger, because remember, in the annual dividends, we are trying to always surpass our previous year 2021. We've already surpassed our 2019 goal, so it's also really exciting as well. We already surpassed the 2020, but it's exciting surpassing it way higher. Yeah guys, that is pretty awesome. Let me show you guys the O&L with the relative income here. So real estate, if we look at the sub pie of this, for real estate, you'll see that now they have O&L, Orion Office. So far we don't have anything show up in M1, so I guess they're still working on it. But as you saw in the activities, that we did get the 6 shares, so we shouldn't actually get those shares sold out. Let me know in the comment section if yours looks different. But yeah guys, that's so far on relative income. And so I am going to talk to you guys about the qualified dividends. So how did this come up? So if you guys are interested in any type of questions or any videos you guys want me to make, definitely let me know any type of questions in the comment sections. But this is how this one came up. So I had a question from John. Super awesome question. Definitely appreciate that question. He said, hey, question about the taxes. I thought that qualified dividends were taxed as long-term capital gains, where it is taxed at 0% until $48,000 for singles and $80,000 for married couples, and then 15% for after that until about $441,000, and capped at 20% beyond that. So that is a great question, and I'm going to answer that as well. That is how I am going to show you guys the advantage of the cheat code for qualified dividends. So for anybody that's actually brand new and is still learning, let's go ahead and define what a qualified dividend is. A qualified dividend is a dividend that falls under capital gain tax rate that are lower than the income tax rate on unqualified or ordinary dividends. Tax rates for ordinary dividends, typically those paid out from most common or preferred stocks, are the same as standard federal income tax rates, which range from 10% to 37% for tax years of 2021 and 2022. So the important thing from a qualified dividend is that you're going to get taxed at a capital gains tax rate. This is a different tax rate compared to your normal income tax rate. So your normal income tax rate, we have the federal tax brackets, which I will show you in a little bit, and I will also show you the capital gains tax rate bracket, because they're completely different. You definitely always want to try to fall under the capital gains tax, because it's more favorable, and you know, when it comes to paying taxes. But let's see, by comparison, qualified dividends are taxed at capital gains at rates of 20%, 15%, or 0%, depending on the tax bracket. Because of this discrepancy in rates, the difference between ordinary versus qualified dividends can be substantial when it comes to time to pay taxes. So definitely you want to have qualified dividends. In my way, every time I reinvest these dividends, about the following quarter, those dividends that got reinvested and bought more shares, they become qualified dividends. So in my tax bracket, I am going to be paying about a 15% tax bracket. Well, I guess 15% flat rate, which is pretty awesome compared to my tax rate, where I'm at about 24 to 30% or so. So definitely I prefer paying 15%. But here, a qualified dividend is taxed at the capital gains tax rate, while ordinary tax rates are taxed at standard federal income tax rates. So that is one of the important things. And the other thing I want to show you guys real quick is regular dividends are classified as either qualified or ordinary, each with different tax implications that impact an investor's net return. The tax rate on qualified dividends for investors that have ordinary income taxed at 10% or 12% is 0%. So this is important. So if the tax bracket, which I will show you guys in a little bit in case you guys are still learning or don't really know about how taxes work, we do have this federal income tax bracket. If you're below the 10% or 12%, you will be paying 0% on the qualified dividends, which is pretty awesome, guys. And that is where that cheat code is going to come into handy, which I'll show you in a bit. Those that pay income tax rates greater than 12% and up to 35%. So this would be my case. Majority of us will fall under this tax rate. So you're most likely going to pay about 15%. But for ordinary income up to $434,000, $551,000, have a 15% tax rate on qualified dividends. The tax rate on qualified dividends is capped at 20%, which is for individuals in the 35% or 37% tax bracket, and with ordinary income greater than $434,551. Here I actually don't see myself, if you're really in the tax bracket of the 20%, you might want to look into just purely growth investing so that you don't have to be paying a 20% flat rate on dividends. Mine, it kind of benefits me because I'm just in the 15% currently, and as well I'm invested in really low dividend yielding companies, because in the future, 15-20 years from now, I should see those compound, and they will become high dividend yielders. And because the longer you hold them, the longer you're going to grow that dividend yield, because you get raises almost every single year. But in our case, guys, the one thing that I want to show you here is, let's look at how can you become a qualified dividend, right? So how long does it take? So I asked this, it's just about 60 days. So as long as you hold the stock after 60 days, it'll become a qualified dividend. So in our case, if you get a dividend now, you'll most likely pay it as a regular income, and then the following quarter, that will become a qualified dividend. And any new drip will be considered income, regular income, and then it just goes on. That's the cycle. But let's look at the tax brackets, because here is the income tax brackets for 2021. So if you're single or if you are married, they change slightly. So remember that here's the 10%, 12%. So the more money you make, so this column is here on how much you make. So if, let's say, you make between $9,000 to $40,000, you will be paying around the 12% tax rate. So this is where, if you were making below $40,000, you're going to pay $0 on the qualified dividends. So if, let's say, you make $30,000 plus 20, $30,000 plus 10,000 and qualified dividends, you're going to pay $0. So you have to sum up your 9-to-5 job income plus your qualified dividends. It depends on how much where you fall under. So yeah, that's the tax brackets there. So the more you make, the more you're gonna pay in taxes. But let's look at what the standard deduction is for 2021. So it's about $12,550. So this is something that you can deduct whenever you do your taxes, which this is where that cheat code is going to come in handy, which I'll show you guys. So you're probably wondering, what is the purpose of a standard deduction? The standard tax deduction is a flat amount that the tax system lets you deduct, no questions asked. So you can just deduct this. Let's say you make $40,000, that's $12,000 immediately out. So you would only make, if you made a total of $40,000, you would only pay taxes on $28,000. So that is pretty cool with the standard deduction there. But one of the things that gets pulled out of your paycheck on a 9-to-5 job is FICA. So what is that? What is FICA? So FICA is a U.S. federal payroll tax. It stands for the Federal Insurance Contributions Act and is deducted from each paycheck. So this is that Social Security tax that you get taxed, as well as the Medicare tax. So it's about, if we look actually. What is that tax rate? It's about 7.65%. And this is actually taxed on wages. So if we look for a total 7.65%, and you know, on up to about 142,000, almost 143,000. After that, you don't have to pay the Social Security, which is the 6.2%. Medicare, you would have to pay, but it goes up slightly. But so kind of the more you make, it'll cap off. So that is the FICA score, and that is one important thing, because this you only pay this on federal income tax. Remember that qualified dividends fall under the long-term capital tax rate, so FICA does not apply to for qualified dividends. So I'm going to show you guys in a little bit. One of the other things that I want to take into consideration is which state you live in. So all the kind of like grayish states, they have zero state income tax, so you pay zero. You actually pay zero. So Nevada, Texas, Florida, I believe Tennessee is like 1% or so is what it shows. But if you live in these states, you pay zero state income tax, which is pretty sweet. That is one of the states that you could consider moving towards when you retire. But this is important because just to keep the math simple, that's what I'm gonna show you. I'm assuming that you live in Texas or in Florida. Otherwise, if you live on another state, you're gonna have to pay that state income tax of, like, let's say you live in New Mexico, 4.9%, or I guess 4.90%, almost 5% on that. But this is important, so we're gonna assume that you live in Texas, right? The other thing here, I'm gonna show you guys a little bit better chart here for the tax brackets for long-term capital gains. So this is 2021. If we look at this, 0%. So if you make up to 40,000, you're gonna pay 0% on long-term capital gains, and then 15% on anything between that to up to about 445,000, and then anything above that you're gonna pay 20%. So just important notes there. So now we're gonna pull up this tax calculator, and I will leave the link to it in the video description if you guys are interested in checking it out. But we're gonna actually try 2021. So here is where that cheat code comes into handy. If I can actually scroll down, I'm gonna do single. So one of the things, remember that we do have that standard deduction here. So you could remember that the long-term capital gains for dividends for zero, you could make anything below 40,000, but remember that standard deduction gets you there. So if we could technically make up to about $52,000 or so, I'm gonna just do 52,000, and I guess if we subtract the 12,000 out of the 52,000, that would drop us to like the 40,000, which if we click calculate, we would pay a 0% flat fee on our taxes. And then you live in Texas, which is zero state income tax, so your portfolio could generate you up to $52,000 in 2021, and you would pay zero taxes on that, and you would pay zero on FICA, which is pretty amazing, guys. Imagine that awesome cheat code there for you with qualified dividends. This is assuming qualified dividends, that's of course. So ordinary income, you would have to put it in here, but you can play with those values. Definitely check out the video description with this link here, and try it out. But this is the cheat code, guys. Imagine making 52,000 in purely dividends, and you're retired, your house is paid off, you can live off 52,000, you're gonna pay zero taxes. How cool is that, guys? Let me know in the comment section what you guys think of this. But yeah, that was a pretty awesome question. If you guys have any other questions, drop them up in the video, or I guess in the comment section, and I will try to see if I can make some in those new videos that come up every single Sunday. But yeah, guys, that is the cheat code there. The other thing we need to try is going to be actually going over here to our Google Sheets. So we're gonna find out how much we actually got for our, well, I guess we increased our projection. So let's go ahead and go over here to dividend payout. We'll kick off these scripts. So you see that we are going to have Starbucks very soon, but we're going to go over here to portfolio tools, get latest dividends. This should pull in the new data, any new companies that declare dividends, 54. So we should see if any new of them pop up. This takes a couple seconds. I do have tutorials for this if you are interested in this type of content for your Google Sheets. It's completely free. All I ask is that you subscribe with that bell notification and that you support the channel by simply hitting that like button. So it looks like we did get quite a bit of companies declaring dividends, and that is pretty cool, guys. As you'll see here, we are expected to have Starbucks paying us on the 26th of November. And we did get a raise from them, and that would wrap up November, and then we're gonna start off strong with December. I'm really always excited to look forward to the December dividends. Imagine all of these compounding, and this will help out with our growth for projection snowball. But let's go ahead and go over here to settings, guys, and I'm gonna go ahead and delete this. We'll get the new copy from this week of our portfolio and then see how much our projections increase. So let's go ahead and jump over to personal capital. All right, guys, so we're at personal capital. I have this green button. All I'm gonna do is click copy. That copies the content of the portfolio onto my clipboard. Then I can jump back over, right click, pay special values only, and there we are, guys. We can go over here to holdings, and we can actually click portfolio tools, update portfolio holdings, and then everything will get wiped and it'll use that new copy that we just pasted, and we should see how much everything is increasing. How cool is that, guys? $2,988.65 compared to $2,957.60. So we're so close, guys. We're about $12 to $11 away from our huge milestone. And monthly, we're making about $249.05. Weekly, $57.47, and then day, $8.19, which we actually went up by 9 cents, which is pretty cool there. The hour, we went up by nothing. And then hourly work wage, which it looks like we actually went up by 2 pennies. I guess this is if our portfolio was to go work a 40-hour work week, they would get paid an hourly rate of $1.44. We're gonna try to get this to minimum wage eventually. That'll be a pretty cool goal to have. But you guys saw that compounding really helps out, especially with those dividends just coming in, and then we're reinvesting those, as well as me adding $20 on top of every time a company does pay me. So that is pretty cool, guys. And you know, that is all I have for you guys. I think next week we might hit that new milestone, and then let me know if you guys have any type of questions. We can start adding like subscriber questions into the, you know, portfolio updates that I can answer. And yeah, guys, if you stuck all the way to the very end, be sure to drop a hashtag dividends, because dividends are definitely awesome. As you guys saw, how you could live off of dividends with paying 0 taxes. How cool is that, guys? And again, be sure that you're subscribed with that bell notification. As well, don't forget to support the channel by dropping a big thumbs up on the video, and I will see you guys in the next update. Take care, stay safe out there. Bye, guys.